Good morning, ladies and gentlemen, and welcome to the show. Now, we're going to talk about this recession. We're going to talk about what's going on over in Hong Kong. First thing is, I want to get out of the way, is when you get a massive yield curve inversion like we've just had and like we're still in, bonds are bouncing back a little bit today. That doesn't mean you're immediately going to go into a recession. It's a signal that the recession is coming in the next 12 to probably 18 to 24 months. Probably that's generally the signal. That's generally, and this is no different this time. But it is different this time. Why it's different this time is because this time we got a trade war going on. This time we got geopolitical problems in the world, in the financial system itself. We've got countries that are going into a recession ahead of time, like Germany. We've got the Brexit, which is huge. I don't know if anybody out there really realizes the full scale of how huge the Brexit is. I think the Brexit could push us into recession all by itself. We've got Deutsche Bank, which is and other banks in Germany that are failing, and Germany's going into a recession. Like, that's going to really help these banks, these German banks? It's not. It's going to push them quicker. Because of all these extenuating circumstances, this time it's not going to take 12 to 24 months for the yield curve inversion as a signal. It's going to be sooner. It's going to quicken it. It's going to make it faster. So that we actually slide into this recession faster than the normal 12 to 24 months. It's going to speed it up, in other words. It's going to speed up the process. But even though it's going to speed up the process, it's not ready quite yet. Kind of like when you're cooking pancakes, and you ease the flipper underneath the pancake and you pick it up just a little bit and you look underneath to see if it's brown yet. Well, this pancake is not quite brown yet. It's not ready to flip. It's not quite ready yet. Now you're probably asking the question, when's it going to be ready? I see us really getting this thing underway, getting this recession started. And I call it a recession, but actually, because the financial system is so over-leveraged, this is going to be a depression. I see it really getting started around November. And why I say November is, I have a reason. It's all got to do with the Brexit. I really believe, truly, that at the end of October, that they're not going to come to any deal with Europe. Europe is basically hardlined on that, no deal. Boris is going to just basically keep going on and on with this, trying to get a deal through or whatever, and the whole thing's just going to come down to a culmination on the 31st of October, and I think they're going to fall out of the European Union with no deal. I think that's what's going to happen. I think that soon thereafter, Great Britain's going to go into recession. I think Germany will already be in recession by then, right? So you got two great economies. And Italy, is a very large economy as well, and they're a total mess. Their banking system's had it. So we're going to fall into this recession, and most of it's going to start in Europe, but it's going to soon spread to the United States. And the United States will be in a recession too, by probably springtime. By probably the end of the first quarter of next year, the United States will fall into recession too. So this is the timetable I'm expecting, but not right now. Right now, why the market rolled over so bad was on all of this bad news. They can see what's coming. They can see the recession's coming. They see the yield curve inversion. They see the Hong Kong problems, the Great Britain problems. They see all these problems, and they're getting frightened ahead of time, and this is causing the market to roll over. It's a fear reaction in the markets. But, we're seeing the bounce back. So let's get started today, and let's open up the charts right here and take a look at what's going on. First, we're going to check the silver price. $17.15. you know. Now, this is really early days for gold and silver in what's going to become a very long bull run. It's going to be long. This is going to be a long, but it's going to be a slow bull run, but it's going to be long. It's going to be long. And it's going to take gold and silver up to dizzying heights, unimaginably high prices. But it's going to be a long, sort of drawn out sort of thing where you got to be really patient, with this market. But it's going to be, already started to turn, gold and silver are becoming much more favorable, in this climate that we're in. Cryptocurrency's going to do well too, but not just yet. Cryptocurrency is suffering a little bit yet because it's had such a big bull run just a little while ago, and we've got certain things happening. We got Chinese pyramid schemes, Chinese, what do you call it? What's the name? Ponzi schemes, selling Bitcoin into the market, And this has been affecting the price somewhat over the past few days. They've been selling hundreds. They'll sell a block of 100 or a block of 50 into the exchanges, And it's been causing cryptocurrency to have a little bit of trouble the last few days. But we're still looking pretty good with cryptocurrency at 264.5 billion, with a Bitcoin dominance of 68.8%. And the coins have seemed to stabilize somewhat now at these prices. 74,749 for Litecoin and $10,151 for Bitcoin, just staying above the $10,000 mark. Now let's move on to the Dow. Well, that's oil. Okay, here's the Dow. Here's the Dow today, and she's up 205 points on the day so far. She's responding to this little rally's coming because it's a relief rally. They're realizing what I just said a few minutes ago. The recession hasn't really started yet, and all of that drop in the market and everything is a lot fear related. Now, here's the thing: when this recession really does hit, that's when we're going to see the big drops in the market. Oh, it's going to be something else, I'll tell you. Let's take a look here at oil. Oil is running $54.30 for sweet light crude, and we're seeing a drop today in the price of oil. 17 cents. But that's not a big drop. If we go back over a period of months, we can get a better look at this. It really hasn't. You see, it entered the picture. If this is the 6-month chart, it entered the picture and it's leaving the picture on the end of this chart. Not much, really not that big a deal of difference in change in price, in the last 6 months. And it's similar story with the dollar, but the big story of the day is the Treasuries have bounced back a little bit, and this is part of the reason why we're getting this relief rally in the Dow. Let's take a look at Treasuries today, and we see a little bit of a bounce back, but not much, really, considering. I mean, the U.S. 30-year has just come up to the 2. Well, it's 2.01 now. But we got about a 3 basis point rise in the U.S. 30-year. And it looks like the whole yield curve spread, except for the 3-month, is rising today. But it's not rising significantly. It's just like the stock market. We got a 700-point plunge, and now we got a 200-point rise. The same thing's happened with the bond market, the Treasury market today. We see the Treasury yields falling big time, and then a little rise back again. So this situation with Treasury yields is not over yet. That's my take on it anyway. Let's take a look now at the U.S. dollar index. 98.33, and we're looking at a rising dollar. We got a strong dollar right now, guys. A strong dollar. 98.33, And gold and silver have not fallen back that much, considering how this rise in the dollar today. Now, something we got to really keep our eye on, a few things. First off is, here in Hong Kong, the activists are calling for a run on the Chinese banks. But you know, I really don't think that's going to be very successful, because first off, if you understand how banks work, they will bring in liquidity in order to cover if one bank gets attacked and a whole bunch of people come in and they want their money and there's a run on the bank, other banks will come in and pour liquidity in. They work together as a team or a unit. The banks do, you know, across the world. All the banks work in a similar fashion, and how much money they would have to pull out, you know, in order to cause a run on the banks and cause a significant damage, is I don't think these activists really have all that much money. You know, are they rich, really super rich? If they could get the super rich on their side to pull all their money, then they would get somewhere, you know. Now, I'm not for sure about that. Maybe they got billions. I don't know. You know, but I just tend to think that they don't. And so, if they don't really have an awful lot of money to pull out of the bank, then the whole idea will fall flat in its face, because they have to pull enough money in order to make this work, you know. And that's my way of thinking anyway. Let's take a look at Deutsche Bank. 5.89, very low. That's very low, but it's still alive, but it's extremely low. 5.87. Deutsche Bank is not doing well. They could now. You remember all that talk I said at the start of the show about how we got a few months left until the recession starts? All that talk would be gone, and we go right into the recession. Bing, bang, bing. If Deutsche Bank goes down, we'll go right into it that day. That day, the recession will start if Deutsche Bank goes down. And, you know, I've been watching this thing suffer along for weeks and stuff. She could just take a sudden nosedive and be gone overnight. You wake up one morning, it's in all the papers, Deutsche Bank's collapsed. I mean, that's the point we're down to right now with this stock price this low. Just suddenly, the bottom could drop out of it, and it's over. It's ended. That's where we're at with Deutsche Bank. And so, listen. Thank you guys for listening to this Friday show. Probably do some sort of a show this weekend. Really appreciate my audience out there. Seems like I have a core audience, really great people. I really appreciate you guys. And thank you guys for listening to this show, and give me a thumbs up. And we'll catch you on a report probably this weekend. Bye-bye, guys.